Hey guys, Vulcan Trader here. In this video we're going to talk about how to use moving averages to figure out if you're in a long-term uptrend or consolidation period, and how to switch between different asset classes depending on where you're at in a very long-term market cycle. So we talked about how to use moving averages, the 50 period moving average. I keep saying day because I'm used to daily charts, but anyway, this is a 50-month moving average in this case to we predict a recession on stock indexes. So this is the S&P 500, and we just talked about how, okay, well, you have a long-term uptrend like the 80s here, really long-term uptrend, and then you get consolidation once you break through the 50-month moving average here, and then you go sideways for about 13 years, 12, 13 years, and then you go back into the uptrend, which is what we're at now. And if we got an inverted yield curve, so most likely recession is coming in the next year or so. And you can Google yield curve. There's tons of stuff out there about it and what that means. But anyway, so if we end up getting a break below as we go sideways more here, this 50-month moving average is going to come up closer to it. And then if we get a break below it, then we'll probably go into recession for the next, get a bear market. And if that happens, we'll probably, because we've been in a long-term uptrend like this, just like we have here, really long bull market since 09 or so, then we'll go into more consolidation right here. And so you'll see that stock indexes go like this for, it's hard to say how long, but there'll be more of a consolidation period to process all of these gains and make a new base like it did here for the next uptrend, which, be many years later. So, and what you want to do is you want to buy something else that's already been basing, already been consolidating, as breaking out of that base on the long term. If you want to switch into a different asset class, and that is going to go into a long-term uptrend. So a possibility of something that's going to do that, if we go to commodities here, and that is gold and silver, I think. And they seem to be inversely correlated, the stock indexes in gold and silver. So if you look here, pretty much 2011 was about when we broke out to all-time highs in the stock indexes, and gold pretty much topped out about that point and went down and then gone sideways since then. Okay, and then we had this trend line here that I drew, just kind of roughly the top of this area that it's following. Just broke out of that on the, and here's what the daily chart looks like. And actually, it's gold is now up more than the S&P 500 since Trump got elected. You can compare stuff here. So if we want to compare the S&P 500, or if you wanted to compare it to anything else, you could type it in here. But we're going to do S&P 500, and Trump got elected around November 2016. So we go back to there. It's going to depend on what day you pick, but yeah, somewhere, depending on what day you pick, gold's actually equivalent or beating S&P 500 on this time frame, funny enough. And it's where nobody's looking, and it's just coming out of that consolidation. So but yeah, if we look here on the much longer term chart of gold, so we look at, okay, look at this, from 2000 to 2011, gold went up, let's see here, just put a roundabout on the 2000, somewhere in the price range, 573%, okay, in that time frame. And then if we look at the S&P 500 again, SPX, during that time frame, that's when it was going sideways. So if we do a price range from 2000 to 2000, well, actually 11 is actually down, was actually down during that time frame, and then you wouldn't have broken even or gone higher until here for, like I was saying, for 11, 13 years, something like that, before it went to an uptrend. So I think gold has been doing that, going sideways during that whole time period, while the S&P 500 has been going up. So if it switches and we go into a recession, say the S&P 500 breaks that 50-month moving average, I think gold and silver will go into a long-term uptrend and outperform during that time. If we go even further, I'll show you that even more. So we got during this, let's see, we go 1970, which are, gold's at 36, and then we go to, let's look at the, go to the indexes here, go back to the S&P 500, go back, this seems to have happened, and so 1970 roughly, indexes go sideways that whole time, and then what's gold doing during that time? So I'm pulling up on here on this chart because the gold on the trading view doesn't go back that far, but anyway, from 1970 to, let's say here, 1980, if we go to the long-term gold chart, so 1970, right here, 36, 1970 to 1980, 677, so 36, 677, so you're looking at 677 minus 36 divided by 36 and times 100. You're looking at a just ridiculous 1,700% move in gold. And then same thing here on our gold chart that I had up here before. So yeah, when the indexes are going sideways, or stocks are going sideways in general, there's individual stocks you can always buy during these times that are gonna do all right. But as far as the indexes themselves, then gold performed better than that. And then we do the same thing. We can look at from here to here, like I was saying, 500. Oh, we already did that. So during that time frame. So during all those times, past performance is not a predictor of future results, but during all the 70s, when you had the sideways consolidation period to the 80s, gold was going up then gold went sideways. Oh yeah. So gold went sideways didn't go anywhere from 80 to 2000, basically didn't start going up again. If you'd bought it in 2000, whenever we topped out on the indexes, right? Because indexes topped out in 2000, and then gold starts going up and indexes start going sideways. So you kind of switch between those two. And then silver has the similar pattern. You see, I could go back on the silver chart, but it's, roughly the same thing. If it goes from, somewhere in 2000 here, all the way up to here. Don't have to be exact because it's just a monster move. So you got, 940% move in silver, 574 in gold. Silver, anything with smaller market cap, if it's a similar asset, tends to actually usually do better. So that's why silver outperforms, just because it's smaller, so it takes less money to move it. And you had the same thing in silver all the way up to 1980. Let's see if we can look at silver historical chart. Here's a 100-year silver chart, and I'm going to take off the inflation adjusted and log scale. And so same thing here, say 1960, from basically a little under $1, went all the way up to 1980. We went to $36 an ounce in 1980, which is about the time that you'd want to get into stocks. So anyway, just thought that was a really cool thing. So buy you some gold and silver. You can have a pullback during, when there's a general recession. But as far as long term, it'd be hard because, say, right here you go into the recession 08. You have 50% drop here. Can you hold through that? You got to think about that, and how long are you going to hold it? How much can you handle? Because if we go into recession right now, liquidity dries up. There's less dollars to buy things in the short term, and not till after that recession is over will it really turn back up. So you could get a smaller position now, wait till there's a recession, and then after maybe a year after recession's over, stocks start turning back up, everything else too, then you buy gold and silver and it'll perform good at that time. So hope that helps. Kind of keep that on your radar. Look at gold and silver. And one more thing, if you want some more leverage, you could buy gold and silver stocks. So if we look at gold stocks during this time, I had a couple I picked on here, see if we can find one that was been around that long during that time. I'm gonna find one that's been around a little bit longer, up through the 2000s. Where was it? That one wasn't one. Buena Vista. So this one was around, so you could have bought it, say, somewhere in 2000, just to get a comparison, because I think gold went up, what, it was 400, 500%. So you buy, one of these somewhere in 2000 and then sell it in 2011 time frame. But anyway, you get about double the return, somewhere in 900 to 1,000% return. But you're going to have this huge drawdown here. Would be kind of the tough part right here in the, '08 time frame. So maybe you would have sold it here with one of these moving averages. You could buy it back after that's over or whatever. But it just depends on your time frame, how you're doing it. But it's still really long-term chart on the monthly that we're on here, just remember. And see, find another one here. Yeah, here's another one, 2000 to about 2008 time frame, price range. And yeah, much bigger return. I think gold was 400 to 500%. You're looking at 1,200% return on this one. So you get more leverage by buying a good gold stock instead. And then same thing with silver stocks. If we got some silver stocks here, you can just Google gold stocks, silver stocks. You get a list of them. You just pull up a bunch of them, figure out which ones look good on the chart. But let's see, find one that's been around here for a while that we could have bought during the 2000 time frame. Okay, here, right here. I did this one. So Pan American Silver. So see, it went up 1,300% during that time frame. Almost 1,400%. Whereas silver itself was, let's see, what was it? Go back to silver. It was 940. So actually, silver was on par, actually, or close to it, not quite. But anyway, just some ideas there. Maybe you could buy a basket of silver mining stocks look good, or just pick one that looks like it's moving up good to you, or just buy the actual commodity itself. I think it's good to own I personally think that owning just a little bit of physical gold and silver is good for everybody instead of the some sort of security that has it underlying. But to each his own. And yeah, I hope that helps. And to keep your eye on the precious metals. Thanks, and have a good day. Like, subscribe, hit the bell. Let me know if I'm too long. I'm just trying to explain everything here. Anyone that does watch these, I don't have many subscribers yet, but yeah, if I'm too long on all these videos, let me know if I should break up into more bite-sized pieces. I'm trying to get everything in, what I'm thinking in my head, to make sure I give a complete view of all the information so I don't miss anything to help you out the most. But if it's too much and there's a better way I could do it, then let me know somehow. Put it in the comments, whatever. Anyway, talk to you later.